Hey everyone, this is June from Turning Point Life Investment, and this video is for August 23rd, 2008. Once again, taking a look at the market, we have SPY right here with the weekly, 3-year weekly view. Now, looking at what happened this week, we had a very nice stop to the bullish momentum towards this 20-week moving average. Let me zoom in a bit for you guys. So from what we mentioned from our last video, we did mention that the 20-week will provide some kind of resistance, and you can notice from the size of this candlestick, or the body of the candlestick, you can tell the bullish momentum is slowly slowing down a bit. Now, the size of this dark candle, the body of this candle, isn't as large as I like it to be, right? If we had a very nice large candle like right here, then we would have created a bearish engulf, which would be a very good bearish reversal sign right here, right at resistance. But unfortunately, we didn't get that. We got a nice small body with a decent size lower shadow. So some of you might be wondering, well, this candlestick looks very similar to this candlestick, and it does look very similar. This is a hammer candlestick. Now, a hammer is a type of bullish reversal candlestick. What that means is that it implies that it follows after a downtrend, which is exactly what happened here. We had a nice downtrend, and then we had a hammer candlestick, so that put a stop to this decline. But here's the thing: if you have a bullish reversal after an uptrend, it doesn't really work that way. A bullish reversal candlestick only works after a decline like here, right? Because you're reversing into a bullish momentum. Since we already have a bullish momentum, you can't really reverse it in that sense. So that's one of the things that I guess for a lot of new candlestick charts readers, that's one of the mistakes that they typically fall into, is as soon as they recognize a certain candlestick pattern, they automatically think that, oh, it's a reversal of some sort. But you have to realize in what context, in what trend does this candlestick appear. If you have a bullish reversal, make sure it has to come down towards the end of a downtrend. If you have a bearish reversal, something like this, make sure it only comes after an uptrend. And that's how most candlesticks usually work. But if you see something like this where it's really in the middle of nowhere, then it doesn't really apply all that much. Going into a daily view. Now, we did have a nice break of this trend line right here. Now, I want you guys to notice something. So usually when support is broken, just like how we have here, a lot of times prices do come back and retest it as resistance. So right now we are testing this trend line as resistance right now. So it's a matter of, we don't really know, is it going to hold or will it blow through this trend line? So I guess we have to find out within this coming week, maybe Monday, Tuesday, whatever the case might be. But looking at the candlestick, there is still bullish momentum. There's nothing reversal about this particular candlestick. So we are at a critical point, so to speak. If the Monday or Tuesday produces some kind of reversal, then that would pretty much indicate that this trend line will hold as resistance. Now, obviously, if you notice, volume is definitely slowing down. So we are in this correction mode still, right? There's really no, as far as direction-wise, there's really nothing that indicates it's a bullish or bearish trend. We're still in a consolidation pattern. Okay, looking at the hourly view, we notice that we do have immediate resistance right around the 130.5, and also back at the high here at 131.5. So there's two pretty strong level of resistance if prices decide to continue higher. We do have immediate support right here at 126.5, which held up pretty well to 2 days of support right here. If this breaks, obviously we look back at 126, 125, and then possibly 123.5 as the next level of support right around this area. And then ultimately we go back to 120 as the real level of support. Now, looking at the hour, the stochastic, we see that it's starting to approach. I wouldn't say it's exactly overbought yet, but it's starting to approach the overbought situation. MACD doesn't really tell us anything as of right now, but you can see we're still range bound between this area, between 125.5, 126.5 and 130.5. So we're stuck here. I would like to see a clear break of 126.5 before, if you guys decide to add into either towards more puts or selling bear call spreads, whatever it is, however you trade SPY. I want to see a break of 126 before we add on to more positions. that indicates a little more bearish momentum. Looking at the VIX, we do have ultimate support right here. Support right around 18. You do notice that the trend is starting to slope downwards even more, which translates to a bullish momentum towards the SPY. So we're looking for support right around 18, and then we had our low right here back in May, mid-May, which translates to that high we had back in mid-May for the SPY. Let me bring that up. Right here, okay? So, but we're not exactly at that point yet where we're extremely bullish, right around the 16. So until that we reach that point, then we can possibly look for some kind of extreme bullishness. But right now, really nothing much from the VIX. Going into the open positions, open interest. This is the front month of September, SPY. Looking on the left-hand column here, this is the calls. So from what we mentioned, 130 and 132, these pretty much stand out as possible resistance area. Okay, so from the chart, we said 130 and a half and 131 and a half were resistance. So from the open interest area, it more or less translates to those particular strikes. And then look on the puts for possible support. We do have a cluster of high interest right here, right between 123 and 125. And then also this one stands out at 127. So once again, it does more or less translate to what the chart says. Let me bring it up again. Going back into the hourly view. So basically more or less translates to support right around this area again, and then once that breaks, we notice that between 123 and 125 there is a whole cluster of high open interest, so expect to find some kind of support right around this cluster here, and obviously resistance is up here. Okay, so basically a break of 126 and a half would be a better sign as far as towards the bearish momentum is concerned. And we do want to make sure that this upper trend line is going to hold right there. Okay? Alright guys, I'll talk to you next week.